Right, so good morning, good afternoon, good evening, wherever you are. We're here today with Javier Colón, who's one of the co-founders of Darwinex, and also happens to be the creator of most algorithms, I would say, at Darwinex, to do with the diagnostic toolkit. He's the inventor of the original investment attributes that we're all used to. If you're a Darwinex user, you'll be familiar with all attributes that you'll see on any Darwin listing. He's also the pioneer of the D-Score that everyone's been using thus far. And today we're excited to announce that the D-Score is evolving into a much more refined version of itself. Isn't that right, Javi?
Yes, at least as we are going to try to do a much better version of the D-Score, because it's a key differentiator of our from our competitors. No?
Mm-hmm. And that's right.
And I think we have evolved it all over our history, our short history, since 2013. And this time it's a massive change, and requires a little bit more explanation, so that everyone understands why we want to change it, and what is the impact to our offering.
And most importantly, when you do things like this, when there's an existing algorithm, everybody gets accustomed to it. Announcing simply that we're changing it tends to sort of ruffle many feathers. So I think it's important.
No, clearly, it's at the end. If you think about the D-Score is the key category or the key metric. Of the Darwin, and it affects to the ranking Darwinia. It affects the visibility of the Darwin inside the platform. So whatever change we do, clearly it
has to be done very carefully.
Yeah, we need to be really careful that we are not just a startup anymore. We have tons of customers, and any of these changes must be done carefully
and responsibly.
Yes,
brilliant. So I think at this point it's probably a very good point to take users back in time a little bit as to
how we started.
The origins of the D-Score. I think over time, Darwinex itself has evolved
a lot. Yes.
A lot, from back in the trade slide days to what it is now, a fully fledged exchange, going on to soon go into institutional territory as well. So It's been a long road, and there's lots that's happened. So it's a good moment, since we're on the subject of algorithms, to probably go back in time to where the attributes came from, how the D-Score evolved as a result, as an aggregation, a weighted aggregation, I believe, of those attributes. Mm-hmm. So it would be good to hear from you directly, the person who pioneered the concept and materialized it into algorithms, as to how did you come upon the need for attributes to begin with? What purpose in your mind would they serve? And how did you want to position Darwinex as a result? I think these things, you're very passionate about them. You and the and Juan and the rest of the people, as passionate as yourselves in the vision, pushed this for many, many years. So I'd very much like to hear, and I'm sure my colleagues in the community as well as anyone else in the audience would really benefit from hearing the why and how you arrived where we are today.
I think there might be different whys. And it's true that we are passionate because we have put here a lot of work. So the D-Score, the concept of the D-Score started almost at the beginning of the idea of Darwinex. At that time, it was 2012, we already knew that we wanted to create that marketplace between talent and capital. The thing was how to do it in the fastest way with the resources we had at that moment. But one thing for me, it was really important, and me as a trader, I suffer from it, is that we needed to have a metric that really show that, or make the biggest trader visible.
Okay.
So because, for example, at that time there are many competitors. There were competitors at that time, and I was suffering because I think I was myself a good trader. I was never on such rankings because they only were using metrics as return, drawdown, and not too many other metrics to classify or to categorize or rank the training strategies.
That's right. Which makes this all really relevant too, because they all the effort was born out of a need that you experienced alongside.
Yes, it started this way, and
else,
I thought at that time also, and Juan, my brother, and me, we were completely aligned on this. Is whatever we do, it should be available for any investor, not just traders. So
that's right.
If an investor who has never made a trading and wants to invest on traders, and we don't show him the best traders, at the end the marketplace is not going to work, because on one side, best traders will not come because they think, hey, where's the money? The money is being allocated in people who are much worse than me. And the other side, investors will lose the money really fast. So at the end, there is a marketplace. So we thought about that we should have some kind of metric that allow us to find the good trader from all the universe of strategies. Later on, we thought about if we need to publish it or not, because, and this where it comes the second decision. We said, hey, maybe it's a good way if we come up with a metric that is actionable from different attributes. If we succeed on this, then I think it's worth to make it public so that traders know why are they classified or they are ranked this way. And
absolutely.
And we thought about that at that moment. We had no marketplace, so we thought, hey, why not launch like a diagnostic toolkit in which we were able to really rank trading strategies based on the
investable behaviors.
Yes, on how predictive they are, to how good they are in order to generate future returns, which is as a signal. And we are going to come back later, because we need to think about a strategy. It's not so you have a trading strategy and you have a signal.
That's right.
And the D-Score, what measures are signals. And I will explain to you this later, because it's really, really, really important. But as I said, we came up to this idea that it was a metric that we needed, and ideally we should do something that was actionable with, or was dependent on different attributes, so that the trader could grow as a trader and know how exactly he could increase his visibility in the platform. This was the original idea. Once we started with this, how to measure appropriate signal, then we immediately came up with tons of difficulties.
Yes.
And this is where I wanted to explain you the difference. A signal. So imagine, I think there is an example on the blog post. Imagine you have a signal or a trading strategy that trades 1-to-1 leverage. He makes 9 trades. And he loses 100 pips in each trade. This would be a loss of 10%, or 9%, because it's 9. But in the last trade, he makes another trade, and he also wins 1%, but with 10-to-1 leverage. At the end, this signal or this strategy, the result is a positive return.
Positive return.
But would you categorize this strategy as a good signal, or how?
That's the question.
That's the question, because was this random? What the decision of making a higher bet on the last trade, was it random, or was it? Because if it's random, clearly this strategy is not a good strategy. And so we came up to the difficulty of saying how we deal with this individual trading decisions in terms of leverage, in order to be sure that the return you see is not an illusion of leverage.
So it sounds to me like you're implying that the difficulties were based on using or studying the risk of the entire strategy. And what you needed to hone in on was, well, since decisions have such an important impact on the validity, the quality of the signal, you probably need to look at it as the risk of a position or the risk of the actual decisions being made, as opposed to the risk overall. So am I on the right track with you?
Yeah, so the thing is that I can make illusions, tons of illusions. I can lie you if I am a good
you can deceive with random decision making.
It's easy to create illusions to investors that are not clearly experienced in trading strategies. I can easily make them feel that I am a good trader just doing illusions with leverage. This is an example with the martingale. It's a clear example of an illusion with leverage. But there are
very tons of looking illusions. Yes,
but there are tons of ways of doing this. No, and this is where. So starting with the D-Score, we said, hey, we need to fix this. And this is when it came into with this investigation. Then it came to life, the Darwin concept, because we said, hey, whatever we do at Darwinex, we need to create a signal that is, I call it pure, so that it's, if I see a return, the return is done in without any illusion of leverage. Mm-hmm. And this is what the Darwin is. The Darwin is the translation of any signal into a signal that is clear enough, so pure without any illusion. And at the same time, it has a target risk. So it has two things. Yes. It has no illusion, and it has a predefined target risk. And this is where the logic of the Darwin came from the logic of trying to see how to categorize or rank a training strategy. But the first thing was the D-Score, and then it came the Darwin. So it's curious because this was the way it worked. No? And it's and as I said, once you want to rank the strategy, then we were more ambitious, and we said, no, let's do this based on different attributes. And we started thinking about the attributes, saying, hey, whatever D-Score we do must be the average, a weighted average composition of the different grades in the attributes.
Right. I think this is a good point to shed some more light on the grades. So the grades, given that we've just talked about everything evolved as a result primarily due to your own personal experiences as a trader, talk to me more about the attributes. What drove your thinking around attributes? Are they because you wanted to encapsulate quantitatively trader behaviors? Is that what drove your thinking and decision?
The idea was that my ideas, and I'm still thinking this way, but it's not easy to do. Sure. It was that if we agree that a certain behavior is positive for the quality, imagine you have you perform 20% or in your return, but the idea is how did you perform it? What is really driving this performance? It's a discipline behind or not, or
luck
or not. But this is where we started to try to measure things that anyone would think about them as that everyone will agree that if you are doing this 20% with and a part of that you are having discipline, it means that this 20% is more robust.
That's it.
The idea was to define discipline or risk management and correlation with the market, the loss aversion, and how much capacity you have. All these things were things that if they are true, it means that the return that you're having, it should be more robust. That's the idea.
And how they contribute towards overall performance of the trader.
That was the concept, yes.
Right. So in essence, you were trying to create a transformation, as you said, that was free of some sort of noise in terms of. One side, the performance must be measured without noise, and at the same time, I'm going to try to measure behaviors or patterns that are in your trading that I think or we think are a quality that makes their performance more robust. That's what was the idea, yes. And did you have any goals as to what these attributes, what goals should they really fulfill? There's one thing what they should measure and what they should, what criteria should they meet? Think in terms of, let's say, investors and traders. What should they do for investors and traders? For instance, what information should these attributes be able to provide? Because here I think we're going to enter into the territory of, well, if we start measuring too much information and put it on public display, we may enter into the territory of compromising intellectual property, which, as we know, is such a big deal to us.
Yes, for example, this is we set up conditions for each attribute. One of them was that we should give enough information from the investor without compromising the intellectual property. That was this is a huge. It's
super important for us. No?
Super important, and it's difficult to do any metric without compromising the intellectual property.
Of course.
But it's true that you cannot see what the trader is doing just looking at the attributes. The idea here is that the attributes, they complement the return. No. The idea is how much you make, and the attributes say how did you did that? No? How you came up to this return? This is the idea. And as I said, this is the idea until today, because now we are going to change it to a completely different approach.
Mm-hmm. So transparency has obviously been super important.
Yes, we don't mind to put our. It's easy that you get criticized, and because but we don't mind. It's the only way to improve.
True. And in terms of what now attributes, obviously traders from all walks of life come into Darwinex and would come into Darwinex from the beginning. Are there any limitations that you experienced when generating or embarking on creating these attributes? Limitations, I should clarify. What I mean by that is in terms of, are there particular types of trading strategies that they apply best to? Are there any particular asset profiles that they are applicable to?
No. The good thing is that they are they suited to any trading style. So they are universal. You can whatever trading strategy, they can be analyzed with our attributes. Mm-hmm. And one condition with them is that the attributes they must be completely independent between each other. Right? Okay, that's important so that each grade gives you information that the other grade is not giving to you. Mm-hmm. So that they are completely independent. That's important to have a proper metric. Whatever attribute that we want to add, if it's correlated with one existing, mm-hmm. we are not going to add it to it. So it means that the information is already in some of the other attributes. So it's more information, so more data without more information. So this is kind of things we need to avoid. Okay. And this one thing that we tried. But as I said, even though I like a lot the investor attributes, and we have learned a lot about them, we have decided not to use them anymore to D-Score. This is the big,
we'll get to shortly.
Yes, this is the biggest change in the concept of the D-Score, and we came up later, but we are going to take about this later because it's important to understand the why.
Okay.